the topic for this panel is really blockchain scalability. What are the issues and what are the potential solutions? So let's just first of all just try to understand, what are we talking about? We hear this idea of scalability of blockchains. Break it down for us, Michael.
Well, I have a background in info security, so scalability for me kind of goes back to that classic availability, integrity, confidentiality triangle. And really, if you don't have sort of trust or a basis to guarantee some type of SLA based on system integrity, based on system uptime, based on security promises, it's extremely difficult to scale it. Resiliency will ultimately crumble. So I really feel like that's ultimately the foundation that you got to build as a basis for your scalability story.
Okay, so to be clear, when you're talking about scalability, we're talking about number of transactions per second on a network. And any of the panelists right now, where are we currently sitting as far as the current scalability, and choose any network you want, whether it's Bitcoin or others, and what are we trying to get to?
Yeah, sure. Hi, am on? Hi.
Yes.
So, yeah, I think we're looking at Bitcoin at around kind of 7 transactions per second, Ethereum sitting at around 20 transactions, and Bitcoin Cash sitting at around 60, 65 transactions a second. So, by all means, nowhere close to the electronic trading systems that we see today. You know, the kind of, high-frequency trading systems that are processing transactions in nanoseconds, right? So, but I think, it really comes down to the philosophy of the network and, what do people consider that network for? So, for example, if Bitcoin was considered as a store value network, do we actually need transaction throughput in the nanoseconds? If we want to talk about, transactions being used on a daily basis to purchase, your morning coffee or your groceries, etc., that completely changes that conversation. Right? I'd like to unpack a little bit as we go.
So I'd like you guys to, so we often hear people saying, oh, blockchain is not scalable.
Yeah.
And we've heard earlier that we've got all sorts of different types of blockchains. So do we have blockchains that are scalable already? Do we ones that aren't? We've heard a couple that aren't yet. So Mandla, just break that down for us as well.
So, I think when you talk scalability, you look at the traditional financial systems. In most cases, people will say, okay, blockchain, thinking from a payments perspective, and then let's compare that with Visa, for instance, right? And how many transactions per second can Visa manage to achieve currently versus Bitcoin, if you're going to use Bitcoin as your rail for payments, and Ethereum at the same time. And then I think where we are in terms of Bitcoin and Ethereum, I want to anchor my conversation on these two because these are the major ones, and we tend to look to them as reference implementations. Is that right now, scalability is not great on both these platforms. If we were to compare them with big players like Visa, like PayPal. But at the same time, this is by design at the moment, especially more on the Bitcoin side, because it's a trustless system, so you need to protect almost the system from things like cyber attacks, things like people having fraudulent transactions. So you don't want transactions to necessarily be that fast at the base layer. And that being said, there's been a number of proposed solutions, things like we've seen segregated witness that almost improves scalability on the Bitcoin side. We've seen things like signatures as well that almost have improved in terms of scalability. But at the base layer, I don't think personally there's much you can do from a Bitcoin perspective unless you want to build something, a layer 2 solution like Lightning Network to almost help in terms of making sure that not all transactions have to go through the main blockchain. Some of them can actually happen on this Lightning, like fast nodes that are running as a layer 2 solution on top of the Bitcoin network.
So we'll get to that soon, and I'm going to get to ROCELO. But you mentioned something, you said a cyber attack.
Yeah.
For the purposes of some of the people in the audience, what's a cyber attack and why is that important? Okay,
so it's basically, if you look at the decentralized system, what can happen is that someone can try to forge different identities, and from identities in terms of payments, because we're using public key infrastructure, especially in Bitcoin. So if someone has already paid something, or like basically send a Bitcoin to someone else, you don't want that person at the later stage to try and almost fraudulently get that coin back. So basically that's the attack.
Okay, so the idea that if we said everybody had one vote,
Yeah.
it's very easy for somebody to spin up tons of nodes
Exactly.
and to pretend that that one
Yes.
individual institution has 1,000 and secure
Exactly.
the whole system.
Yes.
All right. ROCELO, your thoughts? I saw you nodding.
Yeah, well, I think it's too early for us to try to compare any cryptocurrency with Visa, with MasterCard. Lightning is right there. Personally, as a company, I love Lightning because it's going to make more money. As a user, I don't like it. Because for me, in order to send one Bitcoin to another part.
Before you say why, what is Lightning?
Okay, Lightning is just a protocol that was created on top of the blockchain Bitcoin network, and to speed up the process to make sure that we're going to be easier to send one transaction to another transaction. So it's just another protocol that was built on top of the blockchain network to make it easy to transfer. But here's the thing, that is a technical issue on that. For part A to send Bitcoin to part B, the part B has to have the same amount there. So imagine me sending 10 Bitcoins to someone that they don't have. It's the first time that he received one transaction. We're not going to work. So for companies, yeah, perfect. But for the personal user on day by day, it does not work. Then you have liquidity that's being used between exchanges. Also, well, we speed up the process, yes, but it's still not the proper solution. And the technology is just there. We cannot ask that this technology that's so young to try to beat MasterCard, to try to beat Visa. Okay, so let's do a different way. Let's do like we did. Okay, let's use their network. Let's create a kind of virus that will connect on their network and then build a new network on top of that. Like 2 days ago, I just arrived in South Africa, and I went to have a dinner in a place, and I paid the restaurant with Bitcoin. They do not accept Bitcoin. Take me 3 seconds to convert my Bitcoin into this thing, which is MasterCard. It's a band. I just pass there, put my password. Only 3 seconds. Well, one day MasterCard is going to wake up, going to be too late. But the best thing to do is to use the actual network to really bring out the crypto over there. Then after that, you start to go on those restaurants, on the coffee shop, and then you start to show them how to go. Maybe you're not going to be Bitcoin to be used there. Maybe going to be another coin. Maybe going to be coffee coin. Maybe going to be oil coin. Going to be some coin different, but fast enough and a different technology. Bitcoin is too expensive to pay a coffee. No one is going to pay a coffee with Bitcoin. It's way too expensive, the transaction. And come on, someone going to wait 10 minutes to have the coffee? And then let's say the block is too full, because to send one coin to another, I need the miner to validate that transaction. Imagine you buy a coffee and the network is too slow, you have to wait 1 hour to have your coffee. It's not going to work. So how we beat that system? Let's use them. That's the best way. People say, well, let's try to get with them. No, let's try to use them, build a new infrastructure on top of them, and then when they wake up, you're going to be too late. The whole thing going to be there already. That is the best way to go. Of course, going to be technology like Elixir is just coming. And there is many others that will come. Let's give them a time. We cannot ask this technology to replace the shit money tomorrow. We need time.
So, by the way, we're going to have this panel is going to be another 20, 25 minutes. I'm going to ask a few other questions. I think it's a topic that is on the minds of many people. So if anybody in the audience has a particular question, in a few minutes I will ask the audience to think about those questions. Mandla, you were going to respond to something there.
Yeah, I think you, initially, I thought I was worried a little bit when you said things like a Lightning Network is not good. And I was going to say fit for purpose. Lightning Network is not there to replace Bitcoin. It's just, a layer 2 solution to make Bitcoin for payment, make it possible to do like microtransactions without having to wait for miners to validate those transactions. And I think we need to keep doing these, exploring these solutions in order for the technology to move forward. And the same thing is happening on the Ethereum network. Like you see a lot of these layer 2 optimizations, things like Plasma Cache, Plasma minimum viable plasma, all these implementations that seek to say, you know what, not everything needs to go through the main chain. You know, we can have this side chain, but at the same time still protect people to, you know, they can exit if they want to exit in terms of validating transactions on the main chain. And I think those solutions or explorations are very important in terms of taking this technology forward.
Yeah, just let me
the other thing,
complement.
too, is that there is definitely a link between speed and security.
Yeah.
We still have so many payment card hacks. Why? Because at least in the United States, we're still very reliant on magnetic strip. So even though we got this fast burst of payment processing,
Yeah.
that's coming at the expense of exposing customer data in the form of the account number every time we do a transaction. So maybe we just start to re-pivot the conversation to say, look, the fundamental value of the distributed ledger tech with all of the signing, cryptography comes with overhead. It's just the way it is. Anytime you start doing crypto, you have to pay that tax. And as long as we, you know, understand the trade-offs between security and speed, and we make those knowingly, I really like what Mandela said, which is fit for purpose. As long as we understand if these types of sensitive payment transactions are going to come, we have to reset consumer expectations that they're going to come at the cost of speed.
Yeah, but there is one good thing about all this thing, like say, well, we cannot process much. That is a challenge. And that's what the market will be always trying to do something. Tomorrow maybe not going to be Lightning, maybe tomorrow going to be something else. Those challenges is good. So the kids that live in university right now, wake up, look at the technology, look the amounts of opportunity that you have to solve a huge problem that we have right now. Is opportunity for new startups to come and develop something. Yep. That is the best thing this technology is doing. And the best part, completely decentralize it. You don't need to go to ABSA or to that one to talk with. As long as you come up with something very good, the whole world will use. I think this is actually very good. That's what's happening right now.
So I think just to kind of put it into context there, Farzam, you know, we almost have this triangular dilemma, right, where we have 3 points that denotes security, decentralization, and speed or fast,
yeah.
right? You can choose 2 of them, but you can't have 3.
That's right.
So if you look at you know, Bitcoin or Ethereum, it's secure and it's decentralized, but it's not fast. Mm-hmm. And if you look at something like Ripple, it's fast and it's secure. It's not really decentralized, right? Mm. So I think, you know, just to ROCELO's point is we're still early days. I still think we're trying to figure out these various different mechanisms in order to get to a point where we can actually tackle the Visa and the MasterCards. But we shouldn't be comparing the speeds of current blockchain networks to Visa and MasterCard.
Okay, so a question for you then, for anybody that wants to take it. So we've talked about the issue, particularly in the public blockchain cryptocurrencies, where there's this issue of actually getting enough transactions onto the blockchain. To give people a little bit of sense for what that means is, with the entire Bitcoin blockchain network right now, if we said to the whole world, stop using it, let's use the entire capacity for Venezuela because they're having some tough times with their economic system. Currently, the capacity of that economics of Bitcoin would allow every adult Venezuelan to use the Bitcoin blockchain network once every 2 months. So that's obviously not enough for a financial system.
That's right.
Right? So given that, we've talked about with Bitcoin this layer 2, and people talk about layer 3 technologies as well. Really, I've heard mostly about Lightning, and then on Ethereum people talk about Raiden, which is a similar thing. And then we're talking about using the traditional financial systems as well, like the traditional rails. So in addition to those, are there other things that people are looking at right now in the discourse, or are we stuck on Lightning, Raiden, and Visa and MasterCard?
So I think that, you know, if we kind of take a step back here, right, and you alluded to the point is, you know, we make the distinction between public and private permission networks, right? So, you know, we talked a lot about around public networks and the issues around it. So when you start talking about layer 1, that's actually looking at the underlying protocol of the network itself. So we're talking about consensus mechanisms such as proof of work that Bitcoin and Ethereum currently uses, right? Then we talk about layer 2 in public networks, and we talk about Raiden and Lightning, etc. But if you move towards a private permission space, right, we have a lot more scalability, we have a lot more throughput. And why is that? Because the participants in the network are vetted, right? They are pretty much trusted. So what we can then do is we can actually reduce the complexity of those consensus mechanisms, like a proof of work, down to a PBFT, practical Byzantine fault tolerance, it's a mouthful, And we have a lot more scalability. And Pete talked about it this morning, and he talked about Quorum and the mechanisms that they use, the Istanbul ROF mechanism. So I think that we have various different other mechanisms that can be used to achieve scalability, but in the private permission space.
I'd also like to pick up on that, thinking that
Michael,
we can.
just
Yeah,
before,
please.
I just want to make sure people understand what you guys are saying. So you said PBFT, you talked about Istanbul at a high level in English. What does that actually mean?
So what that means is these are consensus mechanisms which define how transactions are validated and then subsequently stored into a block and then chained into the blockchain, if we're talking about blockchains and not DLTs itself. So in the public networks, we talk about proof of work, which actually uses a mathematical equation or mathematical algorithm to be able to validate transactions, and the winner earns a BTC or whatever the native currency is, and then that block is then chained to the various different other blocks. These are the consensus mechanisms used to achieve validation of the transactions that are flowing through the network.
Awesome. Thank you so much. Michael.
I was just going to say to also build on that is I think we're overloading the node itself. So I don't think we've gotten to a point yet in the innovation and engineering where we've sort of smashed the atom of the node. If you think about your typical Bitcoin or Ethereum node, we're asking it to process transactions, certify and validate identities, manage keys, look for network connections. There's no other distributed system that's architected like this. In the rest of distributed systems, we've gone to microservices. And the primary reason we've gone to microservices is we find that making bespoke, small, fit-for-purpose components that are themselves decentralized, it's kind of ironic that we're in the business of decentralization, yet we've built this kind of uber conglomerated stuff of computing goo that does all this thing. I think there's still room to ROCELO's point. If the engineers of tomorrow can help us compartmentalize and segment those nodes to get better, faster, cheaper, more efficient, I think you can get some scalability gains there as well.
Right on top of that, if you just think about before how we guarantee the network safe, mining, using a lot of electricity, expensive, and I know that very well. Now they're using masternodes. A lot of new coins that is coming out is using masternodes. Masternodes, anyone can have a masternode at home on a data center. And for sure you're going to see probably new coins coming and maybe using a hybrid way. Proof of work, proof of stake, both of them with masternode. Again, it's too early.
What's a masternode?
Masternode is just is a new way to validate transactions. So it doesn't use that much electricity. You actually validating transaction can be in your computer at home. You can have even in a data center because you use really small amounts of memory or processor, but you doing the same job as was doing a mining machine. Exactly the same. You're validating if that transaction is good or not. Some of the new coins, they have around 100,000 master nodes. Imagine 100,000 computers to secure the entire network. I don't think Visa has this. So this is just starting. So probably the next generation of coins will be using a hybrid way. Proof of stake and proof of work and running through master nodes. And anyone, a kid at home can have that running. And there we go. And that's the thing. We need to give a little bit of more space. Just new technology will come, definitely will. We're not stuck on this thing. Probably, like I said, if someone asks me, is the Bitcoin the coin for the future to replace money? I don't think so. I really don't think so. I think something will come better than this. But we need this fundamental thing to happen and then to make to be able to scale a little bit more. And then the new one will come in just to sit right on top of the whole thing.
So are you suggesting that with Bitcoin, and I'd love to hear other views. So Bitcoin isn't, and I think you're suggesting that because it can't scale so well, and layer 2, the Lightning is a bit cumbersome, etc., as you mentioned earlier. Are you thinking there might be new innovations on top of Bitcoin? Are you saying completely new coins? What are the people thinking?
I think we're going to have innovations on top of Bitcoin, but I don't think Bitcoin will be the coin that to actually replace the shit money. I think that coin is coming very soon.
So I hold.
That's a technical term.
Yeah. Just for audience know, we have Bitcoin, we have altcoins, and we have shitcoins. Bitcoin is the one that most of the people, they know. Altcoins is like Ethereum, Ripple. Shitcoin is Rand, dollar, euros. That was the shitcoins.
Okay. Would anybody like to respond to that comment?
So I won't respond to that. So, as I alluded to earlier, I think it's early days. If you have a look at Lightning, I mean, Lightning Labs have been operating for, 12, 15 months or so. When they first launched, probably about, a year ago, up to now, we're looking at about, 3,000 nodes currently on the Lightning network, together with around close to 20,000 channels, right? Now, in order to use the Lightning network a couple months ago, you had to launch your own node, which was quite technical, and you had to really figure out what to do. Now we have better UXs, better services, better functionality coming out. Like there's something called Blue Wallet, right? And I advise everyone to go and download it now. And it allows you to utilize or actually have a Lightning wallet on your application. But then again, the actual downside of this is the actual Blue Wallet company is providing a custodial solution to you, right? So you can think of that as actually a centralized function because you don't own any of those keys. They are providing a service to you to be able to use that particular Lightning network because right now it's too hard to actually launch a Lightning node itself. But really, if you allow me to kind of digress for a minute or so, I think we've gotten into the space, and Lauren talked about it this morning. His opinion was that there is going to be one network or one coin to actually rule them all. I completely disagree with that, right? And I think that for a myriad of reasons, and one of the key reasons for me is this paradigm shift on network protocols, right? So back in the day, when you talk about networks like the internet itself, was very, very low value protocol. Right? All the internet really does is route packets around. That's pretty much it, right? So it's a very low value protocol with very high value applications sitting on the top, right? Now there's this new term, I think that was coined by Joel someone, that's actually called fat protocols.
Joel Monegro.
Yeah, exactly, that's right. Which actually, this paradigm shift now happens to be completely the opposite, and is where we're seeing the identification of massive amounts of values within a protocol itself, right, like in Ethereum, and very little value sitting on the top. So you'll see very thin layer of UI or UX providing value to the end user client. And this is how we've really gotten into this world of tribalism. Because we have so much of value sitting within these networks itself, you have all of these camps that are very dependent on where this technology is actually going towards, right? I think that's the world and that's the reality that we actually moving towards. So for me to have one coin or one network is quite naive, right? I think we need to start thinking about these issues such as scalability of these various different networks, be it public versus private, and the various different mechanisms and services that these individual networks provide, and having a look at how we can interoperate between all of these networks.
Wonderful. So if I just recap so far where we are, so hopefully nobody leaves the room talking about scalability for blockchains, but they talk about which blockchains, right? We heard from Pete earlier about Project Coca, which was done on distributed ledgers. Some people would call that a blockchain, and yet it met all the requirements, and so there were no scalability issues there. Is that correct, Pete? Whereas if we look on the other side to public networks, there are challenges. So it's really important to differentiate where the scaling issues actually reside in this ecosystem. And then there are a whole bunch of potential solutions, some that people are pushing forward right now, some from the traditional world, and some that are yet to be kind of invented and coming to fruition. So let me see if there are any questions from the audience. I see one question at the front here, another question at the front, and then two more there. So my job is done now. I'll let you guys ask, and then we've got these beautiful panelists to respond. So if we can get some mics to the front there, please. Thank you so much.
So specifically on the question of scalability, and the VisaNet is often thrown up. So I just want to be clear, blockchains provide settlement finality. Ultimately, it may be probabilistic settlement finality, but you settle. So you pay, you settle. When you do a Visa transaction, and you guys involved in banking will know, that is not a settlement. That is simply a promise that one day the merchant will be paid. And that could be tomorrow, it could be the next day, it could be in 10 minutes' time. So I think we just need to be clear that not only does blockchain provide resiliency, security of settlement, but but it provides settlement. So if you were to say, what is Visa's settlement rate? It's a whole lot less than 20,000 transactions per second, because it's net settled, it's done at night, it's done, after hours, etc. So I think we must also just make sure that when we talk about scalability, we're comparing apples to apples.
Great point.
So my question, sorry, that was my point. My question is, in terms of interoperability, so Paresh, you said that you think there'll be many networks. How much, where are we going in the world in terms of, so in my head, we could have a really super fast permission network connecting onto a public Ethereum network, connecting onto a Hyperledger network. Where are we at with I mean, I know some of the stories, but where are we at in terms of interoperability and specifically scalability across multiple networks?
Yeah. So I'll just, I'll comment on your first piece, and I think it's a great point there, Pete. Where we're moving towards with this emergence of, layer 2 functionality is we're actually starting to see, if you just take Bitcoin itself, starting to see the actual Bitcoin network itself being that settlement layer. Right, so you have the Lightning Network, you have all the various different transactions between one another, all of the various different state channels, and when you want to settle net, then you go to the Bitcoin blockchain, right? Which is quite an interesting concept, right? You think about the Bitcoin blockchain network as just being this high value, very high transaction kind of mechanism to actually settle, right? So back to your point around interoperability, I think that there's been some great progress on, obviously, as you know, Interledger and there's Polkadot and a few other solutions out there. But to be honest, I haven't seen a lot of traction on the interoperability. So, Project Uben, obviously, as you know, is now focusing on, PvP, cross-border payments, etc. With Canada sitting on Quarter, and Project Uben has been built on various different other platforms. I think we're now going to be able to see what this interoperability is actually going to look like. So I think that there's very young, immature solutions out there, but I think that we're going to exponentially see that increase over the years.
Add to that, and I think from my side, I think that there's something that's wrong with this community is that we jump way ahead, right? Before ironing out the base details. Now, right now we're talking about interoperability, but we have not taken the simple man on the street and made the user experience of basically transacting with this asset class easier. And right now we're way ahead. We're thinking, let's interoperate, let's get private chains and public chains talking. But I think we're not spending enough time. And I think if there's an issue, I think on your list there's a question there, like, what is this a major issue? I don't think scalability is a major issue. The major issue is the education aspect. Let's stop, let's look back. What have we learned? Can you take the man on the street with us? Can they use the current existing ecosystem? Can they transact with the tokens that are there? Is it easy? Can they manage their private keys? Have we made that user experience easier? Instead of now, we're jumping 10 steps ahead. We haven't solved the basics, in a sense.
I just want to add a quick point to that, sorry, and then you can shut me up.
No, go ahead.
So it's, I think it's great what Modler spoke about, is, what is the client's action to this? Are we thinking about the man on the street? You mentioned about your dinner last night, right? And you paid in Bitcoin and you transferred it over to kind of smartwatch or whatever it actually may be. But we met with the consortium yesterday, and I brought this up is a real world problem is Venezuela, and you talked about it, right? And there was a great article around a person that talked about keeping all of their life savings in Bitcoin. And whenever they want to actually buy something from the grocery store, they would go onto localbitcoins.com and cash in or trade out to a local currency, right? And reading from the article, there was no issue waiting for 10 minutes, right? So are we actually conflating this? Are we adding issues that are not really there? Again, it comes back to my earlier point is, what is your philosophical view on these various different networks? Do you consider it a transaction network? Do you consider it a store of value?
Sure.
It's kind of the inverse of the identity problem, right? So a lot of the digital identity stuff seems to be wallet, man on the street, down, but they're lacking the back-end robustness. This seems to be so fixated on the back-end and the network, but without the user experience. So it's like those two communities should more cross-pollinate, get together and figure out, because maybe there's something to learn from the identity man on the street user interface, And again, maybe that's because we're already familiar with handling these kind of tokens in the physical world, so there's a natural metaphor, but yet settlement and payment back end is very obtuse to unless you're in that industry.
So we've probably got time for about 2 questions. So Tish, go for it.
Hi guys, great discussion, interesting stuff. I mean, I gave a talk on scaling solutions last year, and to your point about Lightning, what we have seen, I mean, I think when I gave that talk, it was Blockchain Africa 2018, and that was, I think, a month before the Lightning Network went live. And in that time, I mean, I just checked this out right now, the amount of Bitcoin on the Lightning Network that's available in channels today for transactions or micropayments is something like $3 million. And there's about maybe 40,000 Lightning channels that are open at the moment. So, I mean, Lightning, personally, I think it's the responsible way to scale, because I think that a lot of us that are looking at scaling blockchains themselves, scaling at the base layer, we're looking in the wrong place. I mean, Pete made the point about blockchains are for finality of settlement. But the one thing that we have seen is that the only thing that we've seen that seems to stick is that the killer app for blockchains is actually cryptocurrency. And if you think about Bitcoin, the speed at which Bitcoin is created and the fact that we are moving towards a fixed supply, these are some of the elements basically that actually guarantee its value or keep its value. I know a lot of people will talk to me about speculation, but that happens with any kind of new asset class. That is not something you want to mess with. A lot of people have called Bitcoin digital gold. And if you think about how gold operates, it's very expensive to actually mine, pull it out of the ground. We can't inflate the supply whenever we feel like. We can't scale gold, which is a base layer, up. So my feeling is that Lightning is probably the most sustainable solution. I thought about it when I looked at the design, and based on its adoption and its growth, it seems to be going that way. The question I have, now that I've actually just had my little debate, is regarding scaling solutions at the base layer, specifically in Ethereum, and this is to you, Madla. Ethereum's, they have looked at various scaling solutions. They've come close to implementing some of them, and they've had to pull back a few times. Yep. And specifically 2 of the schemes that they've looked at, and I think the one that's quite imminent basically is Plasma, and the other is effectively their sharding approach. Now, Ethereum itself is already relatively complex based on their smart contract and EVM architecture. But with more complexity, and anybody that's built software knows this, the more features and the more complexity you add into any kind of system, the greater you make the attack surface. And if you think about things like the parity wallet bug, and there's numerous examples of this. Yes. So how do you think the community could address that? And why isn't anybody talking about the Raiden scaling solution, which had a similar architecture to Lightning, which I spoke about last year? We haven't heard anything about Raiden since then.
Except that it has a token now.
Well, they were talking about a token back then, but I haven't heard much
All right.
since.
Just a point there. Sharding and Plasma. Plasma is a layer 2 solution, and then sharding it's like base layer 1. From a Raiden, and this is my personal opinion, is that the Plasma solution is very attractive in a sense that you can have child blockchains, like side chains, but then you can almost create like an infinite, almost list of child blockchains. So you can have a child blockchain. Within that child blockchain, you can have another child blockchain. I think that's why people tend to gravitate towards that. And then there's a lot of progress. I mean, you see Loom Network, the guys behind Crypto Zombies. I mean, they have an implementation of Plasma Network. So there's a lot of progress in that space, especially the gaming community, because those are the people that, in most cases, were using the main Ethereum blockchain for their games, and those transactions were very expensive. So that's why there's a lot of progress in Plasma, implementing the Plasma specification. Then from a base layer, and to your point, yes, it's very complex. Sharding, I don't know when they're gonna implement that. I know there's a few hackathons where people have experimented with like a sharded Ethereum blockchain, and it's a very complex thing, and I think it's going to take a number of iterations. But at this point, I believe that the Plasma specification, Plasma Cash, it's much more likely to see success, because I see most of these Loom Network, or Mr. Go, all these guys, they're implementing a Plasma and it's driven purely by smart contracts.
I think proof of authority is more practical than
That's
sharding.
it. Exactly. That's exactly it.
I know there's another question. We're out of time, unfortunately. I just want to give the panelists just a few seconds each, just to say anything that I should have asked, or the audience should have asked that you weren't able to communicate. Let's just go maybe from ROCELO back to Michael.
Right, well,
comments.
First, thank you very much to have me here today. I hope I could contribute with something. One thing that I'm always tell all the users that it's using cryptocurrency. Privacy is the most important thing, right? A lot of exchanges, they do KYC. I think know your privacy. If an exchange asks you for paperwork, documents, run. Run. That's the whole thing. Protect your privacy. The most important thing on these days, cryptocurrency was made for privacy. The regulator will come up with a bunch of things. They will try to regulate. I feel sorry for them. The banks, they will try to close the deal, to close the business. I feel sorry for them. They will not be able to stop it. But a lot of users, a lot of exchanges, they are making huge mistakes and getting more and more information about the user. What happened when you hacked? Now, the hacker or the person that works inside that exchange can sell your information. And here's the point. You have a cryptocurrency in your hands that within seconds you can transfer to somewhere else. So someone can go to your house, put a gun in your head and say, just press send, and that's it. So that's why privacy is really, really, really important. Protect that. Think about all the time when you have hard wallets, paper wallets, all kind of wallets, but protect your privacy. Do not give your details that simple, that easy. And let them come, let them fight.
Talking about privacy, if you actually think that's his face, he's actually wearing a mask. PARESH.
Yeah, look, I mean, scalability is a massive topic. We've only barely scratched the surface in about 40 minutes or so. We've kind of centered around layer 1, layer 2 kind of functionality, and I'd just like to kind of end off by saying it's not layer 1 or layer 2. Right? I think it's a layer 1 and layer 2 issues that we actually should be solving here, right? I mean, if you have a look at Ethereum, they've tried to solve this, the actual movement from proof of work to proof of stake, and this has been put off for quite a bit of time. It's almost, an analogy would be trying to change an aircraft engine in mid-flight, right? So these are complex topics. Scalability is not just one issue that is plaguing blockchains and DLT at the moment. I think that we should be looking at privacy, confidentiality, scalability, usage, etc., mass adoption, network effect. And all I'd like to say is keep on building, right? And let's start focusing on what is going to be the value proposition to the end user client. There's a lot of people working on base level foundations, the various different Ethereums, Bitcoins, the hyperledgers, etc. Let's start focusing on what is the applicability of these networks, cryptocurrencies, use cases to South Africans and African citizens as a whole.
Thank you so much. Mandla.
Yeah, I think I'll touch on the point that I think I raised earlier on. It's just around this space, this ecosystem. We need to try and be more accommodating and involving other people. It feels like, for me, instead of worrying about scalability, we need to worry about bringing people, teaching people these things, and making, for those that are deving, improve the user experience. I mean, the public key infrastructure is complex. How do we make it easy? So it's about making this ecosystem open to the simple people, simple men on the street, and stop compromising on that.
Thank you. Michael.
I feel like that privacy and scalability are sort of the risks that are well known and well discussed in the community. I'm very worried about disaster recovery and high availability. I think we take for granted that, it's decentralized, everybody's going to have a node. And I really am I'm deferring, thinking about how to actually do disaster recovery of a distributed ledger, especially if it is providing settlement finality. I think there's a lot more work, to Mandela's point, especially the community needs to come together and really start stress testing and thinking about how do we move from this you're on your own disaster recovery, we'll just splay a bunch of nodes out there, to we actually have to have very programmatic and standards-driven adoption for how to do, Corda, high availability, Quorum, Bitcoin, doesn't matter what protocol, we really need to think about if you took something like, the ISO standards and frameworks for BR and business continuity and apply them to this community.
Thank you so much. If you can all give them a round of applause. Thank you so much.